managing director for equity research covering restaurants, and he recently downgraded Wingstop to neutral from outperform. And, well, Nick, a big part of that call was the rising cost of chicken wings, something frankly, I hadn't kept an eye on, but they're up pretty dramatically just over the past few weeks alone.
Yeah, they are. And usually when wing costs are going up, Wingstop's share price tends to either stagnate or go down. So I just think we're in for a period of underperformance.
So give us a sense, though, of why that underperformance is. And when we talk about the increase in the cost of wings to Wingstop and ultimately for the franchisees, is there a sense here that those costs will be passed on to the consumer?
Yeah, so wings are between 20 and 45% of their of their total food basket, depending on the price of wings. So, coming off of all-time lows, wings were about 20% of their food basket. We think it could go up to 40% plus of their food basket again, just given the volatility and the magnitude of historical moves in wing costs. And so when that happens, franchisees tend to increase prices more than the advisable ahead of corporate sort of advice. And that tends to impact transactions, and usually the share price follows. Now, this is in the context of 20% comps in Q1, mid-teens comp in Q2. So there's already a lot of nervousness in terms of how they're going to be able to anniversary those comps going into the first half of next year. And you add the uncertainty around wings on top of that, all of a sudden that wall of worry just continues to build.
Talk to us about how seasonality factors in here, because you write in your note that if you think about the demand going into March Madness, for example, that's a time when wing costs tend to rise. When you think about the price pressures that we're seeing now, is that an anomaly at this time of year?
Yeah, usually wing costs don't tend to go up this early. They start to go up into the football season, the start of football season, and peak during the Super Bowl, stay steady, go up a little bit into March Madness, and then you see a little bit of a seasonal downtick after that. So the fact that we're already going up tells you that the supply-demand dynamic has shifted. We had chicken breast prices that were at all-time highs, and so we had a lot of supply of chicken come online. And now that, chicken breast prices have declined, you're seeing that supply shrink a little bit. On top of that, you're seeing the demand return in terms of, dining out, et cetera, the bar and grill segment. So, as we go into next year, I just think this is going to continue, particularly as we go into the seasonally stronger period.
And Nick, we don't have much time left, but I think that's a really interesting point. The return of dining out. We were talking about this a little bit in the context of Domino's. It seems like Wingstop is one of those restaurants that doesn't necessarily benefit from a return to normal, if you will.
Yeah, I mean, the overall concept of return to normal doesn't necessarily benefit the delivery, restaurants. Wingstop has been very successful in sort of Wingstop-specific drivers of comp, like the introduction of the chicken sandwich that is driving a lot of the comp right now. But ultimately, now that's in the rearview mirror, we don't see too many big catalysts ahead of us as we anniversary those very big comps.